We just drilled late last year for the first time ever underneath ATO 1 and 2 and have had new discoveries and extensions. So that's a big win for us because that's material that's not in the feasibility study, but is all already economical and doesn't require additional capex. So we're continuing to follow on that add depth growth through new discoveries or extensions at ATO 1, 2, 4.
Hello, welcome to Assay TV. Today, I'm delighted to be joined by Aneel Waraich, who is the Executive Vice President and Director of Steppe Gold. Aneel, great to see you today, joining us from Beaver Creek, your hotel room there.
Yes.
ATO, you've got the project there in Mongolia. You're a producer of gold in Mongolia, but you're going through a major sort of phase 2 expansion. You've just put some announcements out. So if we could just sort of start things off, you set the scene for our viewers. Tell us a little bit about what sort of phase 1 brought you to and what you're hoping to achieve with this phase 2 expansion.
Yeah, absolutely. So phase 1 is an oxide mine, heap leach operation right from surface down to about 40 meters. And then after that, you transition into the fresh ore or the sulfides from 40 meters down to about 350 today. So all 4 deposits actually are still open. So this phase 1 mine has been back in production since March of this year, generating positive cash flow, which is great, especially in this very tough equity market conditions for all of us in any industry. So that's been a big win for us to have that steady production since March of this year. So we're running around just under 4,000 ounces per month, just under $1,000 all in costs. Now that's obviously a more inflated cost given that we're producing a bit lower than our run rate capacity. So as we continue in the next few quarters, you're going to see our cost structure come down closer to about $800 all in cost. So you have an oxide mine that produces roughly about 50,000 ounces over a 12-month period at about $800 all in cost. So at today's pricing, call it, conservatively $800 or $900 margin. That's a significant amount of cash flow generation that allows us to grow our business, fund our phase 2 expansion, and most importantly, fund exploration on both this mining license and our very exciting exploration license. So that's really the phase 1 operation in production, steady since March now, and will be in production for at least the next 2 to 3 years while we're constructing our phase 2 expansion. So on the phase 2 side, we actually released a feasibility study for an expansion to phase 2. So this is a permitted expansion that will double our production profile. So starting in about 2 years from now, we'll have about 100,000 ounces per annum of production at about $850 all in costs. That was the feasibility study delivered to the market at the end of late last year. That's an initial 10 and a half years of mine life at that run rate that will continue to grow. And I'll get into that later, but certainly that's a base case, 10 and a half years, approximately 100,000 ounces at $850 all in costs. So very exciting to be able to double our production profile in about 2 years' time, using our cash flow to fund that expansion alongside debt.
And you just announced 2 major milestones of this phase 2 expansion. The first one being a power agreement. You're getting grid power from the government. Tell us a little bit about the details of that plan, and also, how you came to choose going with the grid power option.
Absolutely. So when we completed our feasibility study last year, it was based on fuel only. So diesel as the input, and obviously that's more expensive. And not ideal for a much larger operation. But that's what we used in the feasibility study because we didn't have an agreement with the government in place to connect to the grid. That was always our intention. In fact, we did a power study to look at connecting to the grid, to look at renewable energy sources. And of course, we couldn't solely rely on renewable energy sources. So that's still on the table to be a toggle between grid power and renewable energy sources. That's wind and solar. In the future, but now we have an agreement in place that we can actually connect to the grid. So while constructing phase 2, at some point in the next 2 years, we'll connect to the state grid, and that will save us over 10 million US a year in OPEX, which equates to over $100 an ounce in OPEX, right? So that's our all-in costs that are stated at $850 will come down by $100. So that's a big win for us. That wasn't included in the feasibility study. So a major milestone and catalyst for the company that we continue to optimize from a cost perspective, but also from a growth perspective, that phase two expansion based on the October 2021 feasibility study.
And I noticed in your announcement, you also mentioned that there are some benefits for the local communities as well in terms of being able to be connected to the grid.
Yeah, absolutely. So now it gives us the ability, which we've, the local community is benefiting already, right? And we've created direct and indirect jobs, over 300 full-time jobs locally now. 70% of our staff come from within the province and 99% come from within Mongolia. So that's 300 jobs we've created while bringing phase one online. As we bring the power online, it allows us to be a power supplier to local communities. So there's certainly a benefit to our local communities for us being able to produce more power than we need, or have access to more power than we need, and then we can distribute locally. So, ESG is a big deal. It has been for many years, but this is something that we set up our company from day one back in 2016. It is all about the people. How can the people benefit? How can Mongolia benefit? And we've shown that, and certainly we're seeing the rewards of that. So that's certainly a big deal.
Excellent. And the other big announcement, of course, is this new crusher you're having built. Tell us some of the details of that, some of the facts and figures.
Yeah, so this is a 1,000 ton per hour fixed crushing circuit. So it's 4 times the current capacity that we have on site. So currently we're using a 2-stage crusher. It's a more modular, I guess you can put it. This is going to be, as you can see from the pictures and videos that we put out, a fixed crushing circuit, 1,000 ton per hour. So 4 times our current capacity. And so it's certainly needed for phase 2, but allows us over the next 2 years, one, to potentially process more oxide ore, crush more oxide ore, hopefully produce more ounces, generate more cash flow to fund the expansion in phase 2. Second, it'll allow us to get a head start on building up inventory for phase 2. So while constructing phase 2, we can actually crush that harder material underneath and build up an inventory to process as soon as we commission that phase 2 expansion. So it's a big deal. It's a big installation. It shows that the reality of this project moving forward to phase 2, something we procured last year and installed, and all in is probably about a $10 million spend US between acquisition and installation. It should be done by next month.
Fantastic. Are there any benefits in terms of sort of power consumption per tons crushed?
Well, yeah, it will lower our power consumption as well. So again, going back to that power consumption. So about 50% of the capacity of the crusher will allow us to still crush more material than we are today. So that's certainly another benefit once that comes online. So phase 2 is certainly coming online. What's left is certainly the financing package. So as I mentioned, the cash flow from an inventory we have in phase 1 over the next 18 months can fund, I would say, majority, if not all, of the equity component required. We already received 2 weeks after announcing the feasibility study late last year, a $60 million US debt package, a landmark debt package sponsored by the Bank of Mongolia. So that's a majority of the debt required for phase 2. So what we're planning to do between the end of the year and call it Q1, because we don't need the funds today, is to expand that debt package so that we are fully funded for this phase 2 expansion.
Fantastic. And those just those 2 components that you've announced, I mean, what are they going to do in terms of your cash costs in total? Well,
the crusher, TBD, I guess, at this point, but certainly the power is a huge savings. It's over $100 an ounce savings. So that's material, and it doesn't matter if you're a $1,500 an ounce producer or $1,000 or $800 an ounce. It's a material savings to our production in the future. So it's a huge deal.
Fantastic. So that's the phase 2 expansion dealt with. Exploration though, what's happening on that front?
Yeah, so this is the beauty of what Steppe offers today, is that we are producing, we're generating cash flow, building up our balance sheet, and also funding exploration on both properties. So the ATO mining license, where we're currently producing, we just drilled late last year for the first time ever underneath ATO 1 and 2, and have had new discoveries and extensions. So that's a big win for us, because that's material that's not in the feasibility study, but is all already economical and doesn't require additional capex. So we're continuing to follow on that at depth growth through new discoveries or extensions at ATO 1, 2, 4. And so what you're going to end up seeing is, hopefully in the next 6 to 12 months, that 10.5 years will be closer to hopefully 15 to 20. So, and without any additional investment in terms of CapEx. So that's the beauty of the exploration that we're doing right now. We're continuing to grow the resource. As a reminder to our viewers, we started this project, this company, when we bought this project from Centerra it was about 1.2 million ounces of resources, inclusive of 210,000 ounces of reserves. Through our analysis of the data, we started drilling and we increased that to about 2.5 million ounces on a resource, 1.6 million ounces on a gold equivalent reserve. So a huge bump already. And we do believe this is a 3 to 5 million ounce deposit. That's at the ATO side. Now, not second or least, but the UK project down in the southwest of the country, it is maiden ground, never been drilled, a 14,400 hectare exploration license that we acquired in 2017 and only completed groundwork, IP, magnetic soil sampling, and trenching. Right from surface, we saw 1.5 grams gold, 450 grams silver. We just didn't have the time or resources to actually focus on it. This summer, we started drilling there for the first time. So now we have a drill rig drilling underneath the ATO deposits, and we have a drill rig down at our Udamhundi UK deposit. Now, what's unique about that UK deposit is it's also being drilled around. So we're in the middle of some very promising ground, new territory, new gold district, where our peers, Erdene Resources, have had a lot of success. They have the adjoining resource licenses to the north and the south of ours, and they have over 1 million ounces, and it looks like they're tracking to 2 million ounces by the end of this year. So we're in the right spot, given where they are to the north and south, and we're in the middle, and we've seen what we've seen on the surface. So now we get exploration results coming from this property finally, and this is something that we do think could be a mine down the road. We have obviously phase 2 for a couple of years of focus on, maybe down the road. So, very exciting for exploration. So there's going to be continuously updating the market for phase 1 production on a monthly basis and that cost structure for production, continuous updating the market on phase 2, on the expansion and optimization. So both from a growth of the life of mine, growth on the production profile, hopefully by the time it comes online, and from the cost structure, and then exploration. So that's a nice mix that we offer.
So you've got a lot of news coming out, a lot of news flow there. How's the market reacting to all of this?
Well, obviously, you can't fight the tide, as anyone with good news has seen in the last 6 to 12 months. But certainly, we've put out some good news in the last few months. Our Q2 financials shows that we're obviously profitable. So in August, we put that out, and right after we put out the power solution that we just discussed. So certainly, we've seen insiders. As a board of management, we own 20% of the company. We haven't raised any equity in over 2 years. And then we have our largest shareholder, individual shareholders, Eric Sprott. He owned just over 10% of our company. He came in a placement at double our current share price 2 years ago, and he just bought 500,000 shares on market during the month of August. So that's a great endorsement ahead of this fall marketing and our news flow, to have one of our insiders to buy more on market to show that support. Given he's I think a net seller across his portfolio, he's never sold a share, and now he's buying more on market. So that's a big win for us. We'll continue to support ourselves, and I think when the market recovers, and we're one of the guys that will recover and re-rate very quickly.
And you're finding the Mongolian government supportive as well?
Absolutely. So I think we've shown that multiple times in the last few years. I guess, first is, the sovereign fund made their first ever investment in a mining company into Steppe Gold just before we started production in January 2020. Then just late last year, the Bank of Mongolia sponsored a $60 million US debt package for our expansion project. And then this year, since May of this year, and it's a unique situation and probably won't last forever, but we'll take it. And it's been for a few months now, and probably will be a few more months. But the Bank of Mongolia has been buying, the Central Bank of Mongolia has been buying our gold at a 5% premium to spot pricing. So we do 2 gold sales per month, and that's based on 5% premium to the spot price. So if you look at our financials, which people would have in Q2, our net realized price was higher than the average price for the whole quarter because of that. So very supportive government, open for business, open for attracting foreign investment. And with this new, this final takeover with Rio Tinto and Turquoise accepted formally, you can see that Rio Tinto, a super major, second biggest in the world, basically doubled down in Mongolia. So I think you can see from a de-risking perspective or perception perspective, government supportive, the country's open, and we have a great advantage here.
Excellent. Well, you've got a lot of work ahead of you with this expansion, all this exploration. But thank you very much for joining us today for that update, Aneel.
No problem. Thanks so much for having me.
Thank you.
Thank you. Thank you.